Good morning, everyone, and thank you very much for joining me. This is the morning market review, and it is the 13th of March. My name is Russell Shaw. I'm a senior market specialist at FXCM. And just before we get into the live stream, I want to go ahead and bring up our disclaimers, and we'll start off with the high risk investment warning. I'll keep this on screen for a few moments for you. Okay, just going to go ahead, bring up our market commentaries disclaimer as well. All right, and what I'd like to do is start off with the inflation rate. Let's take a look at that. So taking a look at the CPI data that was released yesterday. And I think the first thing to note, let's take this indicator out, is that we have slowed down remarkably. So take a look here. Here is the inflation rate increasing. Okay. Hey Raj, good morning and welcome. Okay, so there's the inflation rate increasing, and then here we've got the inflation rate coming down, and now we've gone into a sticky period, haven't we? You can see over here that we're starting to move sideways. Okay, starting to move sideways. So the I think the fact that the inflation rate has effectively stopped moving down. Remember, we want to get through to 2%. Okay, so we want to get somewhere around here. Let's just put in 2%. Okay, so here we'll just make it 2%. So we started moving sideways here. And I think that must be worrying the Fed, because we effectively needed to turn southeast. Let's just take a look at the core inflation rate. This is the headline inflation. Just before we do that, let's just add a rate of change as well. And you can see here we're starting to lose the acceleration to the downside. It's starting to move towards zero. In other words, we're losing that acceleration towards 2%. Let's take a look at the core inflation rate. And we're looking at CPI. Remember, CPI is not really the inflation measure that the Fed looks at. They look at PCE, but they're very closely aligned. So let's just go through to core inflation. Okay. The core inflation, not quite as sticky as the headline. So here we're cutting out volatile items such as volatile items such as energy and food prices. Now this is interesting. Let's just go ahead and put in our trend lines. So what we'll do is we'll connect it as so. Okay, so there's the downward sloping trend line. The core seems to have actually accelerated to the downside. So that's interesting. Let's just keep in mind where we're trying to get to. Okay, trying to get to 2%. Here's target. There's target. Okay, let's just, so we, on the core, when we've stripped out the volatile items of energy and food, yeah, we kind of do get that acceleration. So we're just going to have to keep an eye on that. This is a little bit more encouraging than the headline number, but that headline number is worrying because it does suggest that there is sticky, and take a look at the rate of change. It does seem to suggest a slight acceleration, slight acceleration to the downside. Hello, Kim. Good morning to you. Welcome. So, what was the market response to the inflation? So let's just go through to the real rate. I think what we can do is we can just get rid of the drawings. Yeah. All right. So this is the daily chart. And what happened yesterday with the real rate is that it actually came up in response to that obvious stickiness in the headline inflation. Core coming in actually a little higher on a month-on-month basis than expected, but at least the core showing slight improvement. Headline, the stickiness looking quite pervasive. And then what happened with the dollar yesterday is that the dollar moved up until it reached the high of the day. At the high of the day, the dollar bulls did soften somewhat, and then it faded off. Let's just take a look at the what happened yesterday in terms of the risk market. So let's just change US dollar here, and let's just put in SPX 500. Okay, and SPX actually had a fairly strong day yesterday. Now, let's just take a look at the SPX 500. Let's take this arrow out and put the arrow in over here. And this actually does seem to suggest some sort of positivity. It's quite odd. I would have expected that the higher yield would have acted somewhat on the SPX 500. What we do see here, is a reference candle. So let's just make this into a reference candle, and you can see that this is Monday's candle. Comes in with the lowest low in at least 3 candles. Then yesterday's candle gives us a condition 2-3. Let's take a look and see what's happening on NASDAQ. Okay, and we can put in our arrow here as well. And we can see that we've got the reference candle in there as well. So I mean, I find it a little counterintuitive, to be honest. I think that the markets themselves are quite difficult to interpret at this stage. There is a certain overbought condition which one thinks needs to be corrected at some stage. Nevertheless, okay, despite the fact that the inflation rate was showing some signs of stickiness, the risk markets came in with a relatively good day. Let's take a look at this closer in terms of our zones. So we're going to go through to our zone analysis now. And let's go ahead, bring in the SPX 500. Remember, it's got the reference candle reversal now locked in, right? Okay. SPX 500 on a daily is really moving really strongly in zone 1. It's between the upper blue and the upper red. And if you take a look at the RSI is just moving between 50 and 80. That's the bullish area of the indicator. So it's really showing on a daily time frame. It's really showing signs of absolute resilience. If we go through to our weekly, I'm just clicking on W for weekly. You can see, gee, we've got this overbought condition here. And I just wonder how long we're going to stay overbought for. I'm quite cognizant of the fact that we're overbought on the weekly. That means even though we are showing signs of we're really thriving on the daily, you must be very cognizant of the downside risk here. Stop losses, risk management, money management, an absolute necessity. Let's just go back down to the daily chart here. And it's difficult to kind of make sense of the markets, because on one hand we've got this overbought condition, on the other hand we've got the increase in the real rate. And with the overbought and the increase in the real rate, you would expect that to act as some sort of headwind on the risk markets, and the risk markets absolutely resilient. So what can we do as traders? Well, we can, I think, respect the fact that the market's going to do what the market's going to do. Let's go down to the hourly chart and see if there is some sort of clue to what's happening on the hourly chart. All right. Now, this is the hourly chart. You can see that this is kind of where the inflation number was released, and there's just this heightened volatility with it shooting up, shooting down, shooting up, shooting down. Ultimately, what the market seems to be preparing itself for is for rate cuts in June. Nevertheless, what's going to happen with this overbought condition on the weekly? Let's just keep abreast of that and not lose sight of that. You can see that the stochastic is staying in that upper quintile, and as long as we stay in that upper quintile, there is going to be an underlying support. So the underlying support here is very much still in force. And what's going to happen is if the stochastic rolls out of the 80 area and starts moving down, then we will be losing the momentum on the S&P 500. Let's take a look at NASDAQ. Okay, again, what's happening with NASDAQ in terms of the daily chart? We can see the daily chart for the S&P was it looking absolutely sublime. Let's take a look at NASDAQ. Here's NASDAQ. All right. So over here, we've got a reference candle, okay, a bullish reference candle. And over here, we've got a bullish reference candle. Okay. And it actually looks as if the momentum on the daily chart has picked up. So we can put in a number 1 here. So I just want this a bit larger. You can see that the RSI has picked up. That's looking as if it's suggesting that the NASDAQ, suggesting that perhaps the index wants to pick up. And this is effectively maybe some sort of dip. And the question is, well, how far can the current swing go? Let's go down to the hourly and see what we can glean. All right, going down to the hourly. So here is when the inflation data comes out. You can see up, down, and eventually it moves up. And what's happening here is that we have a really strong looking stochastic. So at the moment, risk on. Okay. Well, if it's risk on, what's happening with US dollar? Let's just take a look and bring up US dollar and just see if there is some sort of opposite movement taking place on US dollar. Again, I must be honest. I'm finding the markets challenging because, well, you had the dollar pick up here, and then it got faded as the rest of the market, as the rest of the risk market continues to show strength. The dollar showed some signs of fading. And let's just take a look at the US dollar on a daily basis in terms of its zones. Okay, here it comes. So what I would be looking for is effectively the fact that we are in zone 3 and the fact that we've got this selling tail here. I would be looking for signs on the daily. I'd be looking for the signs on the daily for dollar to push down. On a shorter term basis. But take a look at this, Raj. We're in zone 3, whereas we saw SPX in zone 1. We saw NASDAQ I had muted myself. This button this button over here comes down, and when I lean forward, it like presses against my desk and it turns it off. Is the sound back? The sound should be back. Just double checking. Is the sound back? It's this headphone. This thing gets stuck between me and my desk. I beg your pardon. What I'm suggesting is I'm saying that there is potentially correlation here because we're in zone 3, okay, whereas the risk market's in zone 1, and because we're in zone 3 and because we've got this selling tail on the daily chart, okay, so here we're in zone 3, and we're looking at this selling tail. What I want to effectively see here, Raj, is signs of continuation. So don't lean forward. Thanks for that, Kib. All right. So the idea here is I want to see if we can hang out in the. I want to see if we can stay in the lower zone. Okay, let's just take a look at one more. Let's take a look at one more chart, and we'll take a look at how the DAX is going to start because there is, I think, the sign of risk on. Let's see if the DAX is responding. Okay. Okay, here's the DAX daily. Just watching that the DAX showing signs of going overbought. We are in zone 1. We are in zone 1. Okay. And here is the reference candle, right? Here's the reference candle. So let's just take a look and see. Okay, Raz, see you tomorrow. Cheers. Let's just take a look at DAX on the hourly chart. Let's just bring that up. Okay, and just sharing that with you. And you can see that we've got this really strong looking DAX here. Just keep an eye to see if it holds in that 80 level. If it holds in that 80 level, then of course we have a continuation of that risk on. Okay, it's 2 minutes into the hour, so we're just taking a look at a little bit of red. But I think if we can hold this upper quintile here, then the risk on environment effectively flows through into our DAX. Okay, so I think that is an appropriate place to conclude. If there's any questions, go ahead, type those in. I shall try my best not to mute myself again. It's understandably quite annoying. Okay, any questions? Any questions? All right, so let's conclude at this part. If you found it useful, go ahead, click on that boost button, that rocket ship. What is with gold? Yeah, let's take a look at gold. Okay, Kim just asking for gold. Let's just go ahead, bring up gold. Okay, and here, let's take a look here. This is the gold daily chart. Now, gold did come down yesterday. As that inflation print came in, we saw gold come down. But I think ultimately it showed a technical correction. So we're back into normal territory. So the fact that we're back in normal territory and the fact that we are in zone 1, then I think, Kim, what you need to do is go down to the hourly chart. And let's just take a look at the hourly chart here. What I would do is I would look to see if we get a positive cross. We've already got a positive cross here in gold on the stochastic. So we just want to see if the EMAs get that positive cross. And if they get that positive cross, then we want the stochastic to move into that upper quintile. And if we can hold into that upper quintile, I think then we get gold moving up, dollar potentially coming down, and that risk on type of sentiment working its way through the various market instruments. Okay, any other questions there, guys? Okay, let's conclude here then. Again, apologies for going mute for that for the time being. I shall endeavor not to click on this again. Let's conclude here. Have a very good day, guys. A good evening. Shall speak to you tomorrow morning. Thanks all.